Welcome everyone. Just a quick intro again. I'm Pardeep Sangha from Haywood Securities, and just to make sure we have all of our panelists here, so we introduce all of them. First off, switching chairs again. Okay. All right. So first off here, to my left, we have Bill Burnham, managing partner of Inductive Capital, all the way from Reno, Nevada. And Bill had quite the adventure getting up here yesterday with all the weather and everything. But Bill Burnham's done a lot of investing in Canada, and one thing in particular, he was on the board of directors of TIO Networks, which was acquired by PayPal in 2017 for $300 million. So he's got quite experience of working with Canadian tech companies. Next to Bill, we have Rob Ballard from Vancouver. Rob Ballard is with Pathfinder Asset Management, and this past year, Rob won the Alternative IQ Best 5-Year Return for all equity-focused hedge funds in Canada in 2018. So congratulations, Rob. And knowing Rob in Vancouver, he's really keen on the really micro-cap, small-cap stuff that a lot of guys haven't heard of yet. Next up, we have Colin Fisher from Toronto here. Stableview Asset Management, and Colin, I think a lot of you guys have known Colin. He's been here at this conference a number of years and is quite outspoken about the technology industry in Canada and quite a big supporter of the tech industry in Canada. From Montreal, with LionGuard Capital Management, and Andre Olmachuk hopefully could bring some perspectives of what's been going on in the Montreal market as well. Just before we kick off sort of top picks, I want to get into a little bit of discussion with regards to the outlook. I know last year we had, the beginning of the year was quite a good market. End of the year tailed off and quite a negative decline in the capital markets. Wanted to get a perspective from our panelists here, sort of what are they seeing for 2019? What will 2019 look like? Is it going to be a strong market, a weak market, or kind of flat? So we'll start off just from one side here with Bill and just give us a quick perspectives of what you think is going to happen with the markets this year.
I think starting out the year, obviously the word is caution. We're going to see a pretty cautious market here in the first quarter. Everybody probably saw NVIDIA pre-announce yesterday on top of Apple. I think both those pre-announcements have really kind of hit the brakes on a lot of investor enthusiasm starting the year. However, I kind of have a little bit of a contrarian perspective in that I think if the U.S. is able to strike a favorable trade deal with China, we might see a shift in sentiment, especially if the Fed holds off. So I think it is going to be cautious, but we could see actually an upturn perhaps heading into the late spring here if some of those things line up. Okay. Rob, what do you think?
I'm fairly optimistic. I think it's tough to make money if you're a pessimist, so I'm generally always optimistic. And I think that regardless of what happens with the economy, tech companies can add value and help companies operate more efficiently. So regardless of what happens, I think there's space to add value in the tech companies that improve efficiency and aren't related to cyclicality of the economy. So I would say I'm bullish.
Okay, another bullish perspective.
Yeah, I'm neither bullish nor bearish per se. I'm more to Rob's point. If you have a company that has a strong business plan, has compelling drivers going forward, and is doing some sort of major benefit to a company or to an industry, then I think typically you're going to see uplift in that business model, particularly in some companies if they're helping with working capital, or if they're helping with sales, or if there's some sort of efficiency or increasing revenues for corporations, and I think then they're going to have an ongoing good year. But I mean, many of the companies I'm dealing with are not a GM, so they're not macro-driven. They're primarily driven by the things that are directly in front of that company. So that's how I look at the world.
All right. Andre.
Sure. From my perspective, volatility is a good thing to make money over the longer term. So it's good to see pullbacks like this. It gives a lot of opportunities to pick up stocks on the cheap. I don't have an overall view whether the market is cheap or otherwise, but we definitely have seen a lot of overreactions to the downside on a stock-specific front, and that's how we like to look at things. So there are some very interesting investment opportunities, especially in December. There has been no bids in a lot of companies. A lot of companies have really sold off. So I'm seeing some tremendous opportunities out there. But overall, I wouldn't buy the whole market. I think that's not the right way to manage the capital. Over the longer term, of course, I agree with the rest of the panel that there is tremendous benefits to some of the technology companies are providing to the industry, to the other players. And definitely, if you invest in a good businesses, you will make money over the longer term. But you do have to pick them at the right price, and we get some of those opportunities right now.
So really a bottoms-up fundamentals approach. Yep.
That's right, Pardeep. Exactly. Bottom-up fundamental focus on company by company, and don't look at the overall market. That's how we operate.
Okay. In terms of themes, I mean, last year we saw there was a lot of blockchain companies here at this conference, and this year we see very few blockchain companies. Just wanted to get some perspectives in terms of different themes that we might see. I know, Colin, you've been very vocal about the blockchain stuff. Maybe you give us a perspective on that if you have something.
No F-bombs, right?
No F-bombs.
All right. Well, I think one of the laws, everyone talks about Moore's law and Metcalfe's law and all. Oh, I think O'Mara's law is probably the one that most people forget about. And O'Mara law says we overestimate technology in the short run and we underestimate it in the long run. And particularly with blockchain, you think about the early days of the internet. That which is all possible is coming to fruition today, but there was all these different technical hurdles that had to be true for us to be able to have an Uber app, or for us to be able to do some of the internet purchasing and whatnot that we can do now. So I think when you look at blockchain, I mean, they're still at proof of work versus, people are talking about proof of stake. There's no working proof of stake blockchains out there. There's a million different things that the blockchain can do and will do, but there's also 1,000 points of failure still built in, things like the wallet interface, understanding the complexity, the UI. So blockchain, I think, has a tremendous capability, but I mean, this is like talking about DARPANET well before it became the internet, before it is what we have now. So I just think, yes, there's a ton to be done, but all of the hype and hoopla around it was just snake oil salesmen going around selling snake oil.
So that's a very interesting perspective. Let's see some other opportunities
And I
that we're
didn't
seeing.
swear.
Yeah, other things that we're seeing this year is a lot of AI, artificial intelligence. We're seeing cannabis tech. We're seeing gaming. We're seeing private companies, public companies. Maybe I'll open up to Rob Ballard and maybe Andre in terms of what they might be seeing in Vancouver or in Montreal with regards to gaming, artificial intelligence, and cannabis tech.
Yeah, just to echo Colin's point on blockchain, so it's a distributed ledger. There's tons of applications. I think maybe the worst application for a distributed ledger is digital currencies. But other than that, there's tons of advancements being made, and actually both of my top picks use distributed ledgers in their back office. They just don't talk about it or use the word blockchain. So I think it is going to kind of creep up into business processes, but it won't be a big what Colin said in the long run. And what was it, AI?
Either AI, gaming, or cannabis tech.
Yeah, so we're super bullish on AI as part of kind of a 10-year cycle. Has a huge potential to transform business processes and improve efficiency. Couple difficulties with AI. Firstly, it's lots of competition in the venture capital world. So they're buying up a lot of the good companies and paying high valuations. So it's really hard to find a public company opportunity that does well in the space. And the other difficulty with AI is a lot of them are black box technologies. So it's tough to see, know what's really going on, and you need to see a customer validate it and talk up the technology so you know it's real good. So we're bullish on AI, but there's a couple kind of difficulties that prevent it from being an easy space to make money in.
Okay. Andre, anything you're seeing specific in Montreal happening these days?
Yeah, sure. So Montreal has become a hub for the artificial intelligence. So there is tons of things happening in the city. There's billions of dollars have been invested already in Montreal. There are hubs, AI hubs have been formed by Royal Bank of Canada, by Google, by Microsoft, you name it. So AI hubs have been formed in Montreal. There is a lot more capital coming. We have not seen much from the public side, of course. There is not much way to get exposure to the AI for the public investments yet. There's a lot of capital in the private domain, and the capital is available for those investments. So it's a big deal. It's going to transform the industry. It's going to transform efficiency, of course, for a lot of companies. I want to echo the prior comments. But what it's also going to lead to is going to lead to the emergence of the new product offerings. So the first application of AI that I'm very bullish on comes from the fintech angle. So financial services companies are already investing a lot of money in forming the internal AI teams. And as a result, they're looking at how they can improve Well, point number one is improving internal efficiency, so that's very simple. But second point is how you can really apply it to the new product innovation. So the customer experience economics will change as a result of AI application. And there'll be real partnerships formed between the financial services companies and between the technology companies. Some will be developed internally, but you cannot have the same capabilities as tech companies. And as a result, financial services industry will have to partner together with tech companies. So that's going to be a big deal. It's going to transform a product offering. It's going to transform the customer experience. And this is the first, most obvious application of AI. And subsequently, of course, it will be applied to the other industries as well. And the plethora of applications is huge.
So let's get Bill in here for a little bit in terms of these themes that you've heard from our Canadian counterparts. What are you thinking?
Yeah, I mean, one thing I would say about AI, which is that on the application front, there's a lot of very interesting applications, but in talking to companies, and actually I have a buddy of mine who's been out actually selling AI technology to large enterprise companies in the US and Canada, and one thing that he consistently hears back from those companies is that they're very interested in AI, but they lack the data infrastructure to actually do anything at AI. AI is very data dependent. It requires not just lots of historical data, but it requires also streaming real-time data in order to make use of it. And as a result, these companies, many of which are saying, hey, we'd love to buy AI technology, but first we have to build the data infrastructure to actually manage the data and be able to use it in AI settings. So that one of the reasons that we're very interested from an investment perspective in companies focused on big data, focused on moving data from the cloud to enterprise is because that data is necessary to fuel these AI applications. So I think in the short term, from a public investor perspective, one way to play AI is actually to look more at the data layer and look at companies that are enabling these big data applications, because that ultimately is what's going to feed into these AI platforms.
Last word, Colin, just quickly before we get on to top picks.
Sure. So I think part of what has to be looked at with any type of technology writ large is what is the technology being applied to and what is the value proposition of that technology. So if I say I'm going to reduce the cost of your buttons on your shirt by 50%, and that's only 1% of the overall cost of your shirt, it's not really that big of an application of the technology. Part of the other thing too is you got to look at the AI. There's computer vision, there's natural language processing, there's a whole bunch of different types of AI. I mean, you saw, and what I think is going to be one of the first areas is in the natural language processing, particularly in the financial services, where Scotiabank bought a chat bot that is doing all of their collections. And so what you've basically got is a Terminator that is going to hunt you down through email, voice, text, whatever. They're going to hunt you down until you pay, and they are tireless. And I think that's where they're going to, so if you look at from the lending stack, where's the primary cost? A lot of people are focused on the underwriting for a whole bunch of regression analysis, but I think when you actually look at what is the cost of collecting that dough, that's going to be, I think, one of the most costly areas where you have a lot of human input, time, and you have low traction in your collection. I think that's probably one of the first areas where I go, that's a great application of AI through the natural language processing, which is probably one of the more advanced areas.
Okay, so it wasn't meant to shift it towards AI, but obviously we're seeing a definite trend here amongst our panelists here and liking towards the AI, artificial intelligence space. But moving on to the top picks. So we'll just run through one top pick per panelist here. And if you can just keep your comments brief, and also give me the ticker symbol, or if it's private, let me know if it's a private company, but give me the ticker symbol as well. So we'll start with Bill on this side.
Okay, I'll start with Canadian-listed CCOM, CMI. CCOM's a satellite antenna manufacturer, which doesn't sound that interesting unless you look at the broader trends in the satellite space in general. What's happening is that a tremendous number of satellites are getting lofted in the past few years, and actually in the coming next few years. These satellites are all going to offer broadband internet service. This year we're going to see the first satellites for a constellation called OneWeb that's going to go up. We're also going to see the first satellites go up for Starlink, which is the SpaceX internet satellite constellation. The SpaceX constellation is supposed to be 14,000 satellites when they complete it, if they actually complete it. But what's going to happen with all these satellites up in space is that the cost of internet-based service from space is going to come way down, and the biggest issue with receiving internet service from space are antennas. The antenna technology is basically based on 1950s technology, hasn't evolved since then, but what you're seeing is there's a revolution right now in satellite technology. It's called phased array flat panel antennas, and CCOM has a partnership with the University of Waterloo, and they are developing a next generation phased array flat panel antenna, and they will be demonstrating that antenna, I think, in Q1 of this year. And as a result, it's shaping up to be a very exciting year for CCOM. If they're able to demonstrate that this technology works, and it's a big if at this point, but if they are, they will be one of the few companies in the world that's in a position to deploy this technology to service what's guaranteed to be these very large fleets of high bandwidth internet satellites. And so that's why we're excited about it. It actually pays a dividend of about 4 or 5% right now. It's cash flow positive, has a lot of money in the bank. And so we look at it as kind of an option play where it's got a stable core business that's paying a dividend, but it has this upside option in this next generation satellite technology.
What kind of growth are they expecting this year? Are you expecting this year?
The flat panel technology is actually nascent. We're not expecting them to generate significant revenues off that this year. It's more a technology milestone. If they're able to demonstrate that the technology works, they're likely to attract joint venture partners to manufacture it. So we see the growth from those new antennas probably next year.
Okay, Rob.
Just actually touching on CCOM, a couple of interesting things to add to your description. So satellite antennas use millimeter wave technology, which is going to be huge for the 5G build-out. So there's a big macro theme that you can benefit from as well. And another interesting thing that CCOM does is they have satellites and antennas on moving vehicles. So I studied control and robotics in university, and that's one of the hardest control problems is having an antenna on something that's moving. So if they've developed some know-how to that, there's certainly lots of other applications that could benefit from that could be valuable IP. But on to my top pick.
It was CMI for CCOM. The first one was CCOM, CMI. Second one, Rob.
So my stock picks in the AI space is Analytics Insight, ticker ALY. So this is a fintech artificial intelligence deal. Before I talk about why I like it, I'll talk about a couple of things I try and avoid and a couple of risks in these types of stocks. So for fintech, it's really tough to be customer facing or front end because the customer acquisition costs are so high and it's too expensive to compete. So for fintech, you want to look at the back office technologies and companies that can partner to provide the guts so they don't have to spend money on customers. And for AI, you want to make sure the product is good and has validation. So Analytics Insight is great because they've partnered with Italy's largest bank for a stock trading app, and in the first month they've already gotten 20% uptake. So here you have a customer talking up the product, and the partner is bringing all the customers as well. So you avoid two of the risk factors that I look at in fintech and AI. And the second reason I really like it is the big bank in Italy that they partnered with spent all the money for development, and now they can take their product and commercialize it across other countries around the world. So they've got a free option on selling something that a customer's already paid for. So
Cool.
stock ticker ALY, Analytics Insight.
All right, great, Rob. Moving on to Colin.
So for me, it's a company called iLookabout. ILA is the ticker. Primarily, I bet on management, first and foremost. So Gary Yeoman, who founded Altus Group and was the founding investor in Real Matters, has got $2 billion real estate tech plays behind him already. They're making an acquisition of a company called Clarosity post-acquisition. So this is a software technology in the real estate space that helps do evaluations for, currently their primary is MCAP, which is MPAC, Municipal Property Assessment Corporation. So they basically create the valuation upon which taxation is done, and so they ensure that municipalities are properly taxing their tax base. The Clarosity also provides a valuation, but they do it for people who do lending, insurance, or net asset values of large portfolios, so companies like Fannie Mae, Freddie Mac, USDA. So you have a management who has already built billion-dollar companies before. They've done it through acquisition and tying companies together. Post-acquisition, the company is incredibly cheap. Its enterprise value to revenue will be, at current prices, at 0.5 EV to revenue. Their competitors are at 5.2. For the comparables, you have organic growth, both from the acquisition as well as through their own client base and Clarosity with a strengthened balance sheet. And then you have the cap structure, which is incredibly tight. So you have 85 million shares, only 25 which are really free trading. 46% is held by insiders and management. 5 more phone calls, you get 20%. Post-acquisitions, all the shares are still held tightly. You're only going to have 25 million shares trading post. So, and one of the things in the real estate is probably one of the least disrupted by technology. And it's right now where they're working the hardest in terms of changing of regulations to ensure that technology gets taken up and really deals with helping with the valuations, so that there's far less human idiocy helping screwing around with the prices.
Okay, moving on to Andre.
Sure. So my top pick in the Canadian technology space is a company called Photon Control, ticker symbol PHO. So the reason I like this company is because I'm very bullish on a long-term demand for the semiconductor equipment. And what these guys do is they provide the temperature measuring solutions during the very complex manufacturing process for the chips. So their customers include Lam Research, for example, represents about 45% of their revenue. And Lam Research, of course, and other some technology manufacturing chip companies, they're going for the smaller cyclical kind of a downturn, but the longer term picture looks great. Why does it look good? The obvious reasons. There's 5G rollout on the telecom space. There is also autonomous driving, which will drive the demand for the chips. There is a big data, of course, also. There's artificial intelligence, which is expected to grow at approximately 30% CAGR for the foreseeable future in terms of demand for the chips. So all this should lead into the big demand for the end markets. And also, what's interesting is that the demand for the product that they provide is outpacing big time the demand for the chips overall. The reasons for that are obvious, because the manufacturing process is getting much more complex. And as a result of this complexity, the CAGR, the revenue growth rate, will materially outpace the revenue growth rate of the chip manufacturers. This company has a market cap of about $140 million, and they have about $40 million in cash. So net cash of about 30%. They generate positive free cash flow today. Their free cash flow yield on market cap is approximately 11%. Free cash flow on enterprise value is approaching 16%. The board of directors is extremely strong. Now they're looking for the CEO, so they have an interim CEO in place. I think they're going to put somebody very good to bring the company to the next level. So it has both organic revenue opportunities as they're expanding their product offerings and introducing the temperature measuring solutions within the different steps of the manufacturing process. And they also have opportunity to deploy this capital, which they're sitting on, to make tuck-in acquisitions to further provide much better solution to the existing clients.
All right. Sorry, I'm going to have to cut you off there. We have to run through round 2. So, so far we've seen 4 companies that are all small cap, micro cap companies. A bit of a divergence from the previous panel. If you heard it earlier this morning, was very conservative, large market cap. Running through the second picks. We'll start with Andre this time. Work this way. You guys get about a minute per company. Unfortunately, that's all the time we have. So, Andre, quickly with 1 minute.
Sure. So my second pick is a company called Calian Technologies, ticker symbol CGY. It's a good company, diversified across different technology solutions. They service a lot of the government agencies, so it's a highly recurring revenue stream. And they're paying a nice dividend of 3.7% or so. Led by excellent CEO, good capital allocator, and they're sitting on a net cash position, which they can deploy accretively as well, which is another reason why I like this company.
So for me, it's Acuity Ads, going back to my original premise of management. So here's a company that took it in the teeth along with everybody else in their industry, and they've been able to turn it around. They just posted their Q4 numbers, $32 million with 10% EBITDA effectively. They're dirt cheap. The chairman of the board is an incredibly handsome man with a very sexy right hand. He's sitting right there. Anyway, really good company. Management got punched in the face, and not enough people quote Mike Tyson in business, but everyone has a plan until you get punched in the face. And they repositioned and retuned the company, and they've made some great acquisitions in the interim, and now you've got a very strong cash-flowing company that I think is poised for great growth.
So that was Acuity Ads, ticker symbol AAT. That was the same one I had this morning.
My top pick is a healthcare IT company called Vital Hub, ticker VHI. So Vital Hub does electronic medical records for niche verticals like mental health and addiction, communities, and children. So niche markets means less competition and higher margins. They've been building out their product over the last couple of years, and we see a lot of momentum in 2019, and we think this is going to be the year for them. With potential acquisitions they can make, they've started to win a bunch of contracts this last month. So VHI is my top pick.
Just coming back to sort of the healthcare IT sort of theme again here, right? Bill.
Yeah, I guess I'll continue that. I'll talk a little bit about Well Technologies. Well is run by Hamid Shabazi, who I had the pleasure of working with in the TO Networks board. Hamid did a fantastic job over a long period there, building that company up, ultimately selling that for several $100 million to PayPal. He's taken over Well and really trying to direct the company towards a digital health technology platform. And I have a tremendous amount of confidence in Hamid and the team that he's assembled and their ability to grow that business. And I think in general, if you look at the digital health space, there's a tremendous opportunity for innovation there. What you're seeing in the United States right now, several startups worth hundreds of millions of dollars are essentially pushing healthcare out into the mobile phone. So you're seeing whether it's Lemonade or Hims or Romans, they're doing prescriptions and also doctor visits through the phone, streaming video on the phone. And I think you're going to see a lot of doctor visits pushed out of offices onto the phone. You're going to see artificial intelligence through chatbots. You're going to see, but also artificial intelligence analyzing data from the health monitors that people are wearing on their wrists now that monitor their hearts, monitor their steps. All of that is going to be used to improve the provision of healthcare and really change the way it's delivered over time, change the way people consume it. And I think Well represents a very interesting platform from which to take advantage of those health trends, not only here in Canada, but also in the United States over time.
Okay, thank you, Rob. So that was Well, W-E-L-L. So just running through the picks, just to summarize, with Bill, we had CCOM, ticker symbol CMI, and second of all, Well Health, W-E-L-L. With Rob, we had Analytics Insight, A-L-Y, and then Vital Hub with V-H-I. Colin, iLookabout, I-L-A, and Acuity Ads, A-T. And with Andre, Photon Control, P-H-O, and then Calian Technologies, C-G-Y. So then thank our panelists here for all their insights and all their top picks. And of course, we tried our best to try to get a bit of perspective here from the U.S., Montreal, Toronto, and Vancouver. So thank you all for being here, and hope you have a good show.